First of all, it's really, really great to be here. It's been a really long time since we've had an event where I can see everybody in person. So instead of talking through my normal Zoom box, it's really great to actually see you all in person. So I'm Claire Singleton. I'm the CEO for Legal & General Home Finance. Today, I want to cover why we're a leading player in the market and why we expect there to be lots of further growth in this market. I'm really excited that I'll get to share with you one of our customer case study videos at the end of the presentation, which really brings to life for me how the market has changed and evolved and how we help support our customers every day. I want to leave some time for questions at the end, so feel free to ask me questions when we get to the end. So firstly, just a little about Legal & General Home Finance. So Legal & General entered the lifetime mortgage market around 6 years ago. And we entered in a really deliberate way. We wanted to really drive product innovation. We focused on bringing some rates down in the market and really energising that market. We now write between 1 in 5 or 1 in 6 new lifetime mortgage originations in the UK, and we've built our portfolio to 6 billion, so a rapidly evolving business within L&G. What's really important to us is our 2,000 broker firms and bank partners that distribute our products. Without them, we clearly wouldn't have a business. They're our key partners. We do a lot of work around growing the market, so bringing new advisors into the market and helping support advisors in their journey into later life lending. We have a real focus around providing support and materials to help advisors provide the best advice for customers in later life. Just want to talk a little bit about the market. So clearly the market saw really rapid growth between 2014 and 2018. People got very excited by the 30% year-on-year growth, and there were lots of people at that time coming into the market, new brands to the market, lots of TV advertising and lots of funding that I'll talk about in a moment. Then I think people were a little bit shocked when actually the market remained flat, 2019 and 2020. But a lot of that was due to political uncertainty around Brexit and then clearly the impact of COVID. What's really great to see is that last year the market returned to some really solid growth. So last year we saw a 4.8 billion market with 4.8 billion being released. So real growth, and there's big expectations for what's to come this year and going forwards. I did want to highlight one thing around that though, which is the growth that we saw last year was actually driven by higher case sizes in the market rather than increasing customer numbers coming to the market. So there's definitely more work to do in terms of reaching other customer pools and making sure that the message around later life lending is really out there to customers. Just to touch on funding. When the market was sort of first in existence, there were probably about 1 or 2 and then 3 big funders in the market. Gradually, we've seen a real influx of funding to the market. So there's now over 11 funders in the market, and there's a real appetite for lifetime mortgages as an asset class for funders. But what that means is the funding outstrips the demand, and that's a really great place to be if you're a customer, because it means super competitive rates in the market and lots of product innovation. So there's no better time to be in this market. Just moving on then. What does the future look like for the later life customer? I want to talk about why we think there's huge market potential for further growth. I think everyone knows we've got an ageing demographic. So over 65s are predicted to make up 24% of the UK population by 2043. That's 17 million people. We know people are living longer and they've got changing needs in retirement. Then, in addition to that, in terms of the key fundamentals of the market, there's a huge amount of property wealth. 3/4 of those aged 55 and over own their own home. And the total property wealth among people over 50 in the UK is estimated to be around 3.8 trillion. So it means the fundamentals for this market are huge. So you would clearly expect to see more growth. What it does need, though, is a continuing shift in customer behaviour. I talk about how the market has grown and how the product use will change, and I'll talk about that a little bit more when we come on to it. But we know that 2/3 of people who inherit a property will sell that property anyway. So it does beg the question, why do we really not consider our home as an asset and use it to the best of our ability in our retirement? Just going to talk about some of the uses of equity release and how this can benefit the wider world. I've put some stats up on the slide, and I won't cover all of them, but I just wanted to call out some of the key reasons people take equity release. One of the biggest use categories is around renovation and refurbishment of homes. So that could be from building your dream extension to actually adapting your home for more safe use in retirement, such as stair lifts or disability access. We've seen more and more people taking a lifetime mortgage also to repay existing mortgage debt. I had a really nice case study in the last few weeks where we were able to help a customer who had an interest-only mortgage coming to expiry and wanted to know what their options were. He was a music teacher. He lived in his property for a long time. All of his pupils came to his house. He really didn't want to downsize and move. It was great that we could help him with a later life mortgage to stay in his property. He was still earning, so he could service the interest on that mortgage, and he still kept his business. We've clearly seen quite a lot of changing use categories through COVID. Historically, people were taking lifetime mortgages to pay for some aspirational purchases, so holidays and buying a car. During COVID, those aspirational purchases definitely diminished, but we did see some other growing use categories instead, and I'm really pleased to say that actually the aspirational purchases have started to come back. Those other use categories where I'm really pleased we could help people during COVID. During times when people suffered job loss and actually needed to support their income. One of my favourite case studies at that time is our London taxi driver. Clearly, income absolutely decimated during COVID and a need to support their family. Someone who was pretty asset rich, had a nice house in London, and could use a lifetime mortgage to support themselves and their family through what is a difficult period. Another key use that we've seen coming increasingly to the fore, and I'll come on and talk about it further, is gifting to family members. So we've seen the younger generation really struggling to get on the property ladder, and we see more and more people taking lifetime mortgages to actually gift early and gift a living inheritance and to help loved ones get on the property ladder. I'll come on and talk about that further. For anyone who knows me and knows what I think about the societal benefits of equity release, I could probably talk about it for hours. But it's one thing that makes me really proud of our business and of our sector. And for every pound of housing wealth released, it generates over £2 of further UK economic growth. That's because you're releasing money that's tied up in housing stock, but actually using it for things like the manufacturing industry, construction sector, and health and social care. As L&G, we're really supportive of the lifetime mortgage sector because it is very aligned with our other institutional investments and how we support UK projects and how we support building back better. So just coming on to how do we make a lifetime mortgage product work best for intergenerational needs. I talked about how the market has moved from really seeing equity release as historically a product of last resort. To many customers now, it's really not seen like that at all. Instead, it's a way to gift an early inheritance. 1 in 6 legal and general customers access equity to gift to loved ones, and we saw that increasing through the pandemic. At the end, I'll show you the video and case study of John and June, who are a real example of how there are so many different types of customers in this market now, and equity release isn't just what some people may think it would have been historically. So I'll share that video with you at the end. Another societal impact that lifetime mortgages can help with is improving the housing stock for the future. We clearly all know that we're facing into a climate crisis, and ESG matters are clearly very high up the corporate agenda. But actually, using a lifetime mortgage to improve the energy efficiency of your home, I think will be an ever-increasing use in the future. Roughly 2/3 of homes fall at an EPC rating of C or below, and we know that there's going to be some governmental pushes to try and do more around improving our housing stock. I'm really pleased that we do see people taking lifetime mortgages to improve the energy efficiency of their homes and in turn to bring down their energy costs, which is another crisis facing society. We launched our Energy Saver Cashback product last year to help encourage customers to consider lifetime mortgages to improve their homes and offer further support for customers who are doing improvements such as double glazing or insulation. I do think that's another area for the market where we'll see innovation as we face into that crisis. Another future usage is around propping up what we refer to as the ever-shrinking pension pot. Homeowners in England could access more through their property than their average pension pot by using equity release. So we know that people have underfunded retirement, and actually I see this again as an ever-increasing use category for equity release, as there'll be more and more need to support people in retirement by using their housing equity. I just wanted to touch on why Legal & General has become so successful in this space. And it's because we are in this space to look after our customers for the long term. So we want to give customers the best outcome we can and look after them for the lifetime of the product, not just at the point of inception. Market-leading products and market-leading rates and fair value for money are taken as a given, but actually where we go above and beyond is caring for our customer during that lifetime. So being there in the points of need for the customer and their family. It's really important how you deal with an estate at the point when actually a customer is moving into long-term care or has died. That's when we really matter. We also offer services through our customers through that lifetime of the loan, such as supporting them through various vulnerabilities, having a 24/7 customer helpline for things like bereavement, and offering advice and support as people move into care. For me, that's what's made us really successful in this space. Our product innovation is great, but we really care about our customers as soon as they take out an L&G product and for their lifetime. Innovation is key in this space. We've seen an incredible amount of it over the last few years. Products have really evolved, and actually, lifetime mortgages are now very flexible. As I've talked about, there is no one customer or no one customer pool. Lifetime mortgages are used for many different uses, and therefore flexibility is key. I'm really pleased with the customer protections that have come into the market. So no negative equity guarantee has been there for a while, but things like interest-serving products are a great innovation, along with having other customer protections such as inheritance protection and portability. This product has really moved on in the last number of years. So I just want to share with you really how the market has changed and how there are various new customers coming into this space by playing this case study video for you. So I'm not the most technically enabled, so let's hope I make this work.
We started to look at lifetime mortgages as we realised there was real advantage in being able to help our children. So we have a lot of money tied up in the house, and it was a way of releasing that money so that they would be better lives for ourselves, our children and our grandchildren. We are very active in our retirement. Golf plays a bigger part in my life now than it did in the past because of the time that is available.
We're both involved in our local sports club. John is the chairman, I'm the secretary. We'd like to do a lot more travelling in the future. John has family in Australia. I've never been to Australia, so it would be lovely to go there.
We did look at downsizing, but having been here nearly 30 years, we love this village, we love this house. So the way we've done the lifetime mortgage means that we've got all the benefits of living here, and yet all the benefits of being able to help ourselves, our children, our grandchildren, and having a lot more fun.
It makes me feel great because we're helping them without having to sell our house.
Or change our lifestyle.
Or change our lifestyle. It's enabled us to do both.
I guess we look at it in such a way now that every day life gets a little bit sweeter.
So for me, that shows what a difference equity release can make to people's lives and how there really no longer is a one-size-fits-all customer. Equity release can help those who are most at need, but it can also offer a really different quality of life for people in retirement and really help them to support their children and their grandchildren. So I look forward to watching how this market grows and evolves. But from everything I've said, the only way that I can see this market going is definitely up.